Warren Buffett just did something he has never done before, and it could be the most important AI investing signal of 2026. The man who called Bitcoin rat poison and avoided tech stocks for decades just led a $10 billion investment into Alphabet. Not a small position, not a test. $10 billion into the company building the world's most powerful AI infrastructure. Welcome back to AI Assets. Today we are breaking down exactly what Buffett buying Alphabet means for your portfolio, why this is bigger than most analysts are saying, and what smart investors need to watch in the weeks ahead. Let's get into it. For those who don't know Warren Buffett's history with tech, this is genuinely shocking. Buffett built Berkshire Hathaway into a $900 billion empire by investing in businesses he could understand. Banks, insurance, Coca-Cola, railroads. He famously missed Amazon. He missed Google the first time around. He once said he did not invest in things he could not predict 10 years out. Alphabet just raised $80 billion to fund its AI build-out, one of the largest capital raises in corporate history. And Berkshire Hathaway stepped up to lead the round with $10 billion. That is not a passive bet. That is conviction. Investor context. Why this matters for your portfolio right now. When Warren Buffett moves $10 billion into a single position, the market listens. And this time, the signal is extraordinarily clear. AI infrastructure is no longer a speculative growth story. It is now a value investment. Buffett does not buy hype. He buys cash flows, moats, and businesses that will still be dominant in 20 years. The fact that he chose Alphabet specifically tells you everything about where the real AI power is being built. Alphabet owns Google Search, YouTube, Google Cloud, DeepMind, and Waymo. That is 5 separate trillion-dollar opportunities inside a single stock. And right now, Alphabet trades at a lower price-to-earnings ratio than Microsoft and Apple, despite growing faster than both. The stocks most directly affected by this news are Alphabet itself, but also the broader AI infrastructure complex. When Buffett validates the AI build-out thesis, money flows into the entire ecosystem. That means Nvidia, which supplies the GPUs that power Google's data centers. It means Arista Networks, which handles Google's networking infrastructure. And it means companies like Vertiv and Eaton, which provide the power management systems that keep AI data centers running 24 hours a day. If Buffett sees a 20-year runway in Alphabet, these infrastructure suppliers are the direct beneficiaries of every dollar Alphabet spends. What the market is missing here is the angle most financial media is getting completely wrong. Everyone is covering this as a Buffett buys AI story. But that framing misses the deeper signal entirely. Buffett is not buying AI. He is buying a distribution moat. Google Search processes 14 billion queries every single day. That is 14 billion moments where a user is actively asking for something. OpenAI has 500 million weekly users. Google has 14 billion daily interactions. The scale difference is not close. When Buffett evaluates a business, he looks for what he calls an economic moat, a structural advantage that competitors cannot easily replicate. Google's distribution, being the default search engine on every iPhone, every Android device, every browser, is arguably the deepest moat in the history of technology. What most analysts are missing is that Alphabet's AI integration into search is not just a feature upgrade. It is a revenue accelerator. AI overviews Google's AI-generated search summaries are already showing ads at a higher click-through rate than traditional search results. Early data suggests AI-enhanced search monetizes at 15 to 20% higher rates than standard search. That means every dollar Alphabet invests in AI infrastructure comes back as higher advertising revenue. This is a self-funding AI flywheel, and Buffett just confirmed he sees it. What happens next? How to position yourself. 3 specific dates and events you need to watch right now. First, Alphabet's next earnings report in mid-July. This will be the first quarter where we see the full financial impact of AI overviews at scale. Watch specifically for search revenue growth rate and Google Cloud revenue. If cloud accelerates above 30% year over year, the stock has significant room to run from current levels. Second, the Anthropic IPO, expected sometime in Q3 2026. Anthropic powers many of Google's enterprise AI products, and Google is its largest investor. A successful Anthropic IPO would effectively unlock hidden value sitting inside Alphabet's balance sheet that the market is not currently pricing in. Third, the EU AI Act enforcement deadline in August 2026. Google has spent more than any other company preparing for AI regulation compliance. That regulatory readiness becomes a competitive moat against smaller AI companies that cannot absorb compliance costs. Watch for announcements around their AI governance infrastructure in the coming weeks. The positioning play here is straightforward. Alphabet at current valuations gives you exposure to Google Search, YouTube advertising, Google Cloud, DeepMind, Waymo, and a massive Anthropic stake, all for a lower multiple than Microsoft. Buffett sees that. Smart investors should too. The Oracle of Omaha has spoken, and for the first time in his career, he is saying that AI infrastructure is a business worth $10 billion of his own money. If you want to stay ahead of moves like this every single day, subscribe to AI Assets right now. We break down the biggest AI investing stories before the rest of the market catches up. Drop your thoughts in the comments below. Do you think Buffett's Alphabet bet is the smartest move of 2026, or is he late to the party? And am I? Let us know.